Porinju Veliyath joining us as well. MD and Portfolio Manager, Equity Intelligence on Market Guru this morning. Porinju, good to have you with us. Let's just start off with your sense of what's really happening. Are you still using some of the dips as opportunities to buy, or are you perhaps seeing further upside for markets from here on? What's the trend according to you?
Good morning, Abha. See, Indian market, structurally we are in a bull market. There's no doubt about that. I have been always talking. Even if Nifty goes to 8,500 also, I will tell the same thing. See, talking bearish about Indian markets or the bear markets in India, it's not very sensible. We can talk about a bear market maybe once we reach $8 or $10 trillion economy. See, investors tend to forget the fact that, we have a long way to go from the current $2 trillion economy, and that is the big picture. So people who are ignorant, who miss that big picture, they talk about bear markets and bounces and kind of thing. I don't see a bear market. I never saw a bear market last 26 years of my profession, which I have told you earlier, if you remember. And there won't be a bear market for next 20, 30 years. See, what is happening, there could be sharp corrections in the market. And above, maybe 40, 50% of that correction is in excess of what is required. And that happens because of the panic and, too much information, and people just throw away shares and too much leveraged positions in the market some point of time. So otherwise, Indian market is on the right track. We know there are challenges in India and globally. It's not that I am not aware about these things. Knowingly, I'm telling you, by simple arithmetics, I am structurally very bullish on Indian markets, and we have a long way to go. It's not about a bounce what we saw. I think anything below 7,500 was a wrong race and was a wrong index for India. But it happens. We cannot blame anybody for that, because the psychological panic by investing community and the traders, it always has been like that. People don't learn from the history.
Good morning, Porinju. Would you be kind enough to build a 5-stock portfolio that I could buy today that can deliver me 25% at the end of 12 months? Just 5 stocks.
I think this is a typical question, MBA students ask. I see there is, I can give you 50 stocks. Why 5 stocks? It's not about the number of stocks. Talking on Ashu, I appreciate your question. That's what people are looking for. The audience, the investors are looking for the names. And there is a tendency in the media, whenever I come up here on the media, people want stock names, because I have been very daringly giving stock names. And if you see the last 2-3 years, see, anybody picks stocks with a little bit extra, of smartness or knowledge, I think they're doing very well, despite the Nifty when going down to below 7,000 kind of things. I'm telling you, any smart stock picker in India, in the last 2 years ago or 3 years ago, their Nifty is already above 15,000. So coming back to your question of a few stock picks, if you want directly on the stocks, Ashu, I feel I was in Mumbai last week also. I was looking at some, very particularly in my last interaction with our earlier Priyank, I was talking about infrastructure opportunities in India. This is a very, very major development for investors going forward. I am very confident about that, because the new government has done wonderful job, in reviving certain required, industries in this country to be revived. That's a very important thing. And what's happening? You will see unprecedented kind of orders invited by the government, the bids invited by the government in the coming quarters and next 2, 3, maybe 5, 10 years time. So, but at the same time, what has happened, there is a major challenge in picking stocks in that sector. Many companies are doubtful about their survival, and the balance sheets are stretched, and few good companies are or richly valued already in the market. But what I am seeing, it's a peanut valuation if you put together all these infra companies, the leader of which is Larsen & Toubro. Comparing to the kind of growth happening or going to happen in infrastructure development in this country, it is only 1/10 of the real market capitalization we can build up in the next 2-3 years. That's the kind of opportunity I'm seeing. So Larsen & Toubro, Definitely, it's a bit it's a bit richly priced, valued company. Those who want to play it very safe for 20-25% kind of what I would say compounding growth for next few years. I think L&T is the number one pick. But smart stock picking, it could be beyond L&T, the kind of the mid caps and some of the large mid caps, which can offer multi-baggers in the next 2, 3, 5 years time. I am more excited in that space. I don't want to tell too many names coming to the lower end, the mid-cap companies, because it can be price sensitive. Still, I have been talking last time about IRB infrastructure, maybe a Simplex infra. There are many companies, Ashoka Buildcon, the road, port, railways, the kind of development, the numbers what government is talking about, the capex numbers. It is amazing, unprecedented. So investors should take a very serious look at companies. We may have 20, 30 companies one can choose from in the infrastructure segment, small cap, mid caps, and large caps. Look at the balance sheets. The balance sheet should be a survivor balance sheet, which I have been always talking. And the promoters, the company should be having execution capabilities. And the promoters should be reasonably good. You won't get very good, too many promoters in that segment. So you have to make a blend of all these things and use the common sense. I'm telling you, your money can go 5 times in the next 5 years. If you make a portfolio of very select stocks in that sector, I am very excited about infrastructure segment at this point of time. No other sector I can see that kind of visibility going forward. It's really exciting.
We'll just take a couple of stocks and then we'll go back to Porinju. Saskin, if we can just bring that up. Just today's chart. Bhushan Steel we spoke about. But again, look, any recovery at the moment is very helpful, and you could see a big bounce. Even if it's a dead cat bounce, it could be pretty significant. Nalco, I think Hindalco Mohit mentioned. We'll take a look at Nalco. I may not have enough time to go through the charts for you for a longer period of time, but Kansai Nerolac, I think it's a paint company. I'm not sure, but let's put that up. Okay, can we just put up a 1 month chart on this one? Let's take a look at if it's been doing something from before or is just started today. Okay, not bad. So that's the kind of stuff if you can find. ICICI Bank, hey, maybe it's not going out of the index. It's up pretty strongly up today. So we can put up a 1 day chart also. So it's done pretty well, I think. As I said, today the moves right across. Porinju, 3 infrastructure stocks, if I may. I wanted to take your view on them. Is GVK, GMR, and HCC. All of these guys have tremendous execution ability. But as a shareholder, you've gone nowhere with them. Could you just walk us through what's happening at GVK, GMR, and Hindustan Construction?
Yeah, Ashu, I appreciate this question. Millions of investors in this country have the same question, I feel. A lot of them may be invested in these companies already, looking at the size and the execution capabilities of these companies. The only thing all of us are aware, that it's having a balance sheet issue. Whether these companies will survive, I think my gut feeling is that they will survive. But these 3 are very similar kind of companies when it comes to the balance sheet issues. See, they have order book in one place. They have a track record of decades of execution capabilities, and they have created huge assets, and which was very important for this country. But unfortunately, by the economic environment, and I would say even the governance in this country, these companies have been suffering very badly, and they were looking at good times and went on leveraging the balance sheet, went on taking loans for the projects beyond the conservative levels. So to be very frank, I won't very 100% confidently suggesting these stocks. But if somebody want to pick, some good infrastructure stock like the already strong one, L&T, and maybe the IRB infra, someone can pick one of these stocks, an HCC or a GVK or a GMR. Don't buy all the 3. And that because once it comes out of that asset liability mismatch, they can create huge order book going forward. That is the real catch. In that case, they can be real multi-baggers from these low levels. Now the market cap of these companies are near to 0, I would say. It may be 1,000 crores, 2,000 crores, whatever. Considering the size of the business, the size of the company, the size of the projects they have executed till now, it is as good as near to 0. So it can be multi-bagger if they once come to a comfortable level of debt, or they accumulate huge order book. The best part, Ashu, going forward, the EPC and the other infrastructure orders will have some margins. All these companies were sitting on, the old orders, which had minus margins in some of them. Now there is a huge demand, so there will be higher margins. We can see 10, 15, 20% margins on the future infrastructure projects for the bid is invited by the government. Not only central government, now with this competitive federalism, I'm telling you, a lot of state governments also see the budget of each state in infrastructure. UP government is having something like 225,000 crores kind of bids. The infrastructure budget. There are some other states like Maharashtra, 70, 80,000. It's huge. So this is unprecedented. That's why I'm telling you there will be better margins. Any company which can survive with the existing balance sheet, accumulating order book, that's a huge. So my answer to these three stocks, GVK, GMR, HCC, I'm sorry to say it's very vague answer because I can't give a very clear cut thing. So take one of those stocks which you are comfortable with, along with some solid balance sheet companies within the infrastructure segment. Don't buy all those three, and don't make a portfolio of some of such companies which are highly stressed due to the balance sheet.
All right. Porinju, let's also turn our attention to banks, closely linked to what we are seeing in, of course, in terms of exposure to some of these sectors that are also trying to come out of, huge debt situations. In light of that, we've been talking about, we all know what's going on the PSU side, but even private sector banks like an ICICI where we are seeing some asset quality concerns. All of this conversation has been continuing now for some time. Even the governor over the weekend talking about how banking consolidation was on the radar, but it would take time. It's still in the discussion stages and so forth. So within the banking pack, what would be your strategy? What are you thinking? I mean, are you bearish on PSUs, or are you confident because of the growth story and the government's involvement that those are important stocks to have? Selectively perhaps, but still in your portfolio?
Yes, it's a very important question. If you remember, 1 year ago I was in the studio. We were interacting, in which I did not buy PSU banking stocks for the last 10 years. So I was explaining, if you remember, I was telling banks are into a very bad business. This is, I think, the end of 2014. Into a business they are borrowing funds and lending funds. The funds what they borrow, they have to pay back with interest. There is no choice. But the funds they lend, it may or may not come. So little exaggeration, of course. So that's a bad business. But things which is already reflecting, if you see the last 1 year, the stock price movement of these banking stocks, especially the PSU stocks, I think they are all done. But even today, I personally won't buy a banking stocks, not because they are too bad and uncertain, but I see a lot of exciting opportunities beyond banking sector. We, in our portfolio management last 13 years, we never bought a PSU bank because it's a fundamental, structurally, it's not a great pick for a value investing. There is no visibility and clarity going forward. Even if somebody is very particular about banking stocks at this point of time after this correction, I would still say to play it safe. Go into some of these, not high-priced, but old generation private banks. It could be something like a Federal Bank or a South Indian Bank. Now, those kind of banks with decades of operations in this country, and they may not be that bad when it comes to NPS, especially the future NPS I'm talking about, in comparison with the PSU banks. So they could be offering much better and safer appreciation going forward. Federal Bank looks like a very good bank. It's around 7,000-8,000 crores of market capitalization. Solid bank.
Right. Porinju, what are your views about ICICI Bank? And also, if you could comment on, some of the telecom players like Idea, where they don't really have a 4G license. So specifically, if you have any views on ICICI Bank and Idea.
I feel ICICI Bank looks attractive at these levels, though we are understanding the NPA problems and asset issues. Personally, if I buy ICICI Bank, I think one can sell book profit in HDFC Bank and convert it into ICICI Bank. If you see next 5-10 years, of course HDFC Bank is a strong, solid company. Staying even the stock price, the market cap is almost very near to the high or all-time high. and it's a great bank. But in a bargain hunting, if somebody is keen on banking, especially ICICI Bank, I think that shift, which nobody will tell, because I'm talking about selling the best bank and buying a stressed bank. But this is something, my gut feeling going about it. And actually, you are talking about the idea. Okay, the telecom companies. I think at these levels they have corrected significantly, and the mobile telephony will continue to be in this country. I like idea at this price. It's a very safe buy, I feel. There are a lot of negatives. If you want to avoid buying, I can give you a lot of negative news about development about that. But these are great companies built up in this country, great brand, and they have a relevance going forward. So at this, at this kind of valuation today, I like Idea Telecom, Idea Cellular.
Porinju, the stage of the market that we are in at the moment, I'll just come back to that question I'd asked you about a year, because if I have ₹1,00,000 or 50,000, it just goes through my mind all the time. Should I stick with the index, which means should I just buy Nifty and stay there? Or should I again pick 2 or 3 stocks in the mid-cap side? Something that can get me double of, let's say, the fixed, income kind of instruments. So would just sticking to the Nifty do it for me, which is like, let's say I stay with the Nifty and I'll get about 15-20% at the end of the year?
Ashu, it's a very good question, and I would answer it this way. Nifty is the only bad pick in Indian stock markets.
Right.
See, I have been always talking, it's a stock picker's paradise. Being a developing economy, we have a long way to go. So why apply some common sense, a bit of knowledge and awareness, pick stocks. This Nifty is basically, I think it's meant for gambling, and that's why we are seeing this kind of volatility going to 9,000 and going to below 7,000. I think it's for gamblers. Let them gamble on that. Let investors, genuine investors, with ₹1,00,000, as you told, let them pick 2, 3, 4, some stocks, with some awareness about this, some guidance, and that is going to be the best. See, Nifty has many challenges, Mr. Ashok. I'm seeing, some companies, when they go to the lowest level, when this company is doing badly, they remove from the Nifty. And some companies which are doing very good, they are richly priced, a bit overpriced, that they come to the Nifty. And that change and churn in the Nifty itself is not very comfortable to somebody like me. Because some of the companies removed at the lowest level, they can improve. They could be industry leaders. So I see some, I'm not blaming anybody, regulatory anybody, but that is, we have to keep certain criterions for entry and exit from and to Nifty. But I think that can have an impact on the Nifty. Then the overweightage on some sector. Again, 1 year ago on Bloomberg TV, I have talked about, the weightage of banks in the Nifty. That time it was something like 30 plus kind of weightage in the Nifty. That could affect the Nifty. This is something I have been talking in the interaction on Bloomberg sometime back, long back, more than 1 year ago. So Nifty, I think small investors ignore Nifty with ₹1,00,000, just ignore Nifty. Pick few stocks, whose promoters are dynamic enough to create wealth for you, and the industry they are operating in is going to be favorable environment in this country. So those kind of criterions, use common sense and available at a reasonable valuation, and those stocks should not be fancied and stock price should not be very much high. So look at companies which are not fancied today and which can be growing at 20-25% in the given economic environment in this country. I'm telling you, 25 to 30% CAGR for next 5 years or 10 years. It is easily possible, and I can tell you because last 13 years I have created a CAGR of above 30% for all my clients under PMS.